All right, what's up, guys? I wanted to do a quick video finally again about the gold price. So on Tuesday, not much honestly happened, so I didn't think it was necessary to do a video. Then yesterday, I wanted to do one, especially with all the big inflation CPI data that came out, which obviously shook up the market a bit. But I was feeling like shit, so here we go. I'm doing one now finally, and yeah, I mean, I think the key thing that I want to talk about is the release of the inflation data and what that kind of means, or what we can kind of expect based on that, because obviously the inflation data came out yesterday. If we look at the calendar here, the CPI data, and needless to say, it exceeded everybody's expectations in terms of the amount of month-to-month CPI increase we saw. I mean, the forecast was 0.3% and it was 0.9%. So this is the second week where some of the data that's been released has actually been just way more than expected. And I think the real question obviously is, so like, what does this actually mean? Because particularly as, people who are trading gold regularly, I think one of the main narratives that always comes up is that if there's increased inflation, then actually that's a good thing for gold, especially historically. But I think one thing that we have to truly understand, guys, is that yes, it can be like that for like the very, very long term, especially when you start seeing a lot more money printing and inflation caused like that. But particularly in the short term, inflation is also a sign that an economy is seriously recovering, right? And when that happens, things like, bond yields, the 10-year treasury yields also shoot up. Yesterday, if we look at how the market yields reacted in particular to that inflation data, we had one of the largest jump ups in the yield percentage that we've seen in a very long time. I think it's one of the longest days the highest run ups seen in a very long time. And obviously, when yields are going up like that and you can earn more money essentially by holding bonds, then assets where you can't really earn this kind of additional income from them are going to drop in value, such as gold. And that's what we really saw yesterday. So we finally got that. If we especially look at the 15-minute chart, we really got that quite strong dip in the price of gold yesterday, which also kind of, I think, was to be expected to some extent. I mean, we have been kind of looking at this general price range here of 1850, 1845 to 1855. And we actually didn't get fully into that box, but we touched it, right, on one day here, right back on the 10th. And I think since then we tried to make a couple of other run-ups, but we just kept on getting rejected. So I think this is proving to be a slightly stronger resistance than most people would have expected. So it doesn't also shock me or surprise me necessarily that we've made this pullback here. But then obviously that inflation news just really spurred it on. And actually it's a good thing because I had my position set up for a potential short there, and we really got that. And at the same time, now that we have this drop, right, considering that we're still, at least I'm personally still bullish on gold in the long, long run, it also gives us some good buying opportunities, right? Because I do think that in the next few months, we should, maybe in the next few weeks, we should ultimately soon be making that test to 1900. I think with the Fed not continuing to increase interest rates, they're probably not going to do this, I think, throughout the rest of the year. So I think that's going to really help push the gold price up, at least in the sort of at this year time. And then also from a much, much longer term standpoint, I think sooner or later it's going to become more and more clear that the economic recovery really is purely from the government spending and the fiscal policy of the American government. And so that's something that we have to really remember. So I do think that this inflation data, while in the short term it could hurt the price of gold, and it wouldn't shock me if we get back to 1800 or even below with that kind of data that just came out, the general sentiment in the market. I think in the longer term, it's only going to just show how much the economy is overheating just because of money printing. And then just like we've previously seen in history, gold is eventually going to act like a real hedge. Institutional investment is going to come into the gold market again. And I do think that we will eventually, in a much longer term time period, break past this previous all-time high from last year and kind of keep on going towards maybe 2200 or whatever the price target may be. So still bullish on gold personally, even though we did get that correction. Also, we just had some more, we had the PPI inflation data come out, but it wasn't nearly as shocking as the CPI one, which was just kind of unexpected. So, you know, we're still seeing a bit of a reaction to that. It was actually lower than the previous month, so that's why there may be a bit of a run-up, but I don't expect anything too crazy. And ultimately, the next few days, I do expect that we'll make a slightly lower test. Guys, if you guys are bullish, these are the kind of chances, though, that ultimately you have to then potentially open the position, right? A longer-term position that we may potentially hold up till 1900. That's the strategy, right? If we want to make those longer-term gains, yes, you can have some shorting positions if you want here, but that, I think everybody kind of knows that this is going to be a much more short-term type of thing, but don't forget to take advantage of, you know, lower prices in gold right now, when we should, in the next few months, be making that run up to 1900. So don't forget that, guys. Anyway, sorry, this video was just kind of like a muddling group of thoughts, but I just really wanted to release this out there just to react to what happened. And yeah, I mean, hopefully today we're going to see a bit more of a pullback, so it's going to give us more opportunity. And anyways, good luck trading, guys.